Hey everybody, it's Tortoise Investing, wanting to come at you today with kind of why I'm investing the way that I am with my ETF only approach. I know I had some people questioning why I own VOO and VTI and why I own VUG and VGT. So I had to do a recent sell-off. I got out of a lot of debt and cleared out a lot of medical bills and stuff. And I'd always said to myself, it's like, man, if I had to start over, I would go all ETF. And, well, I looked at this as kind of like a reset. Sold out a bunch of stuff, and I was like, you know what? Let's do it. Let's actually hit the reset button and build from these new foundations. Before I completely dive into everything, hit that subscribe button. I greatly appreciate it. Drop a like down below. Those two things are super free and easy to do. Helps the channel out a ton, and I want to build this sucker into something super special, and I can do that. I can only do that with y'all's support, and I appreciate it greatly. None of this financial advice. Always do your own research for our best. Okay, now back to what I was saying. But yeah, so this is how everything's set up. Core, growth, dividend, 34, 33, 33. Pretty simple. Very straightforward. If you look here, I have VOO and VTI in my core, split even 50-50, and in my growth ETF, VGT and VUG split even 50-50. So my reasoning behind why I own VOO and VTI, VTI, total stock market US index, has over 3,500 different holdings. It gives me exposure to small and medium cap stocks, which is VOO excludes small and medium cap. So I'm wanting to have exposure to those things while also, having a bunch of stuff from the market. So the way that I went about doing that was I bought both. I have an even 50-50 split between VTI and VOO to get me that small and medium cap exposure. Now, over the long run, I don't know how it's going to play out. It's just what I'm personally doing. Once interest rates and stuff start to eventually go back, whenever that happens at this point, I feel a lot of your small and medium caps are going to do very, very well. A lot of these smaller companies have to really rely on debt and things. They're not going to have such a hard burden under them. And I don't want to miss out on that. I want to have a little bit of exposure in those type of holdings, so I do that through VTI. And I have my VOO, which is just old reliable as well, just sitting there, and I'm DCAing through with all of my ETFs. And that's what I intend to do for the long run. I'm just gonna DCA in, and whatever I deposit, break it up into multiple payments, and whenever I get paid again, repeat the cycle over and over again. But that's why I own VOO and VTI. The next one was why do I own VGT and VUG? There's a bunch of overlap. I broke both of these down here through fund overlap. The fund overlap between both of those is 44%. I don't think it's that bad. 26% of VUG's holdings is in VGT, and 19% of VGT's holdings is in VUG. I don't think that that's that bad. 57 total number of overlapping holdings. If we take a look here, this is the top 10 list for VUG. Microsoft, Apple, Nvidia, Amazon, Facebook, Google, Lilly, Tesla, and Visa. Here's your percentage allocations. Bunch of numbers. You can sit there and see it yourself. When we look over to VGT, you're going to notice some differences. Of course, we got the matching Microsoft, Apple, Nvidia, but then it's completely different. Broadcom, Salesforce, Advanced Micro Device, Adobe, Accenture, I'm not sure what that one is, Oracle, and Cisco. So it's completely different. From 3 down, looks like. Of course, there's going to be some in here and there that they're still matching up. But for the top 10 holdings of your biggest holdings, yeah, there's a good bit of difference. And I like a lot of these. I like Amazon, Facebook, Google, Elily's good, Tesla, Visa, Oracle, Adobe, AMD, Salesforce, Broadcom. Of course, the top 3, the big ones. But I like having exposure to all of those. And the fund overlap isn't all that bad. I didn't think so anyways. So that's the reason that I hold them. So we can dive in using this ETFRC.com, using this tool to kind of take a deeper dive into everything. So with VUG here, Vanguard Growth Tech ETF, we can see it by sector breakdown. So as you see here, we got tech, comm services, discrepancies, staples, energy, financials, health, industrials, materials, real estate. Kind of broke up in a bunch of different sectors. I like that. I like having a little bit of exposure and a little bit of everything. And again, there's your percentages. 224 total holdings. Yeah, different sector breakdown. There's quite a bit of differences. And when you look at VGT, 98.8% tech. Straight up, just tech. 322 different holdings. But yeah, like, I think that they're different enough, in my eyes, my personal opinion. I think they're different enough to where holding them both isn't a terrible idea. Again, I don't think the overlap's all that bad. 44%, it could be a lot worse. I mean, if you were to look at, I know VOO and VTI have a lot of overlap. VTI, yeah, 86%. But still, yeah, if you look at that, 99% of VOO is in VTI. 14% of VTI is in VOO. So, big difference there. There's a lot of things in common, yeah. But I want that small cap and that medium cap exposure. Now, what I could do is I could go out and buy just a small cap, medium cap ETF. I could do that. Or I could just invest in VOO and VTI. So that was my thought process behind everything. And I did a little bit of a math breakdown for you here. So this is my top 5 holdings in my portfolio if you were to break everything up into the individual holdings. So my total portfolio allocation in Microsoft is 7.4%, VOO is 7.08%, Apple is 6.05%, VOO is 5.63%, Nvidia is 4.98%, VOO is 5.05%, Amazon is 2.34%, VOO is 3.73%, and Google is 2.28%, where VOO is 3.71%. So I went through, this just breaks down everything. If I was to just have individual stocks, the way that I did that was VUG is 16.5% in my portfolio. I took Microsoft's 12.96% times 0.165, and that gives me my total holding percentage individually for Microsoft. I went through that with VUG, VGT, VOO, and VTI, and that's how I came up with these percentages from my top 5. And honestly, I like it. I like having the diversification behind everything. I like having the different sector breakdowns here between these two, and I like having the small cap and medium cap exposure through VTI that I don't get with VOO, but I also like having VOO. So I just kind of own them all. And going forward, this is what I'm going to be rolling with. Like, I know that I've sold here and there, in and out, up and down. But I've been market beating over the last year. I'm up 33.12%. Take a look here. The S&P 500 over the last year, 26.26%. So I'm beating the market. I'm playing my cards right. I feel like I'm doing the right things, making the right moves. I'm completely simplified everything. I hit the reset button. And I'm going to ride this out for the long term. A year or two from now, if this is still trucking right along, I'm still market beating, and I'm growing at a rate that I want to personally be growing at, I'll just keep rolling with this. And yeah, see how everything goes. And regardless, up, down, all around, if there's money and there's buying power, I'm going to be buying. And I'm going to keep on depositing every 2 weeks. And like I said, I'm going to break it up into multiple buys. But yeah, that's just my reasoning behind everything, why I own ETFs that I own. Hope you enjoyed that. Hit that like and subscribe button for more. I greatly appreciate it. Until next time, I hope everyone takes care. See yous.